China's property bubble has just claimed its biggest victim. Evergrande, once the pride of China's real estate boom, has been officially delisted from the Hong Kong Stock Exchange. The company that once promised millions of homes and glittering new cities is now buried under more than $300 billion in debt. At its peak, it was worth $50 billion and symbolized China's rapid rise. Today, its value has collapsed to less than a mid-sized firm. For ordinary families, this means unfinished apartments, frozen savings, and shattered dreams. For investors and creditors, it means billions lost. And for Beijing, it means the collapse of what was once a pillar of its economic growth. But this isn't just about one company disappearing from the markets. Evergrande's fall marks the beginning of something bigger, a deep structural crisis that is reshaping China's economy and shaking global confidence. Evergrande did not start as a failure. For years, it was celebrated as a symbol of China's urban miracle. Founded in the 1990s by Hui Ka Yan, it grew into the country's largest developer, building entire cities of high-rise apartments, shopping malls, and stadiums. At its peak, Evergrande was valued at more than $50 billion. Its shares once traded above 30 Hong Kong dollars, making it a favorite among investors at home and abroad. For a moment, it seemed unstoppable. The company thrived on China's booming demand for property. Millions of families saw real estate as the safest way to build wealth, and Evergrande positioned itself at the heart of that dream. It sold apartments long before they were finished, using advance payments to fund even more projects. Banks, trust firms, and foreign bondholders poured in cash. By promising high returns, the company kept the cycle spinning, growing faster than the competition. Hui Ka Yan became one of the richest men in China, hailed as the face of the country's economic rise. Evergrande expanded beyond housing into football clubs, bottled water, electric cars, even a tourism empire with theme parks. The message was clear. This was more than a developer. It was a national champion, backed by the momentum of China's growth. But behind the glamour was a dangerous truth. The empire was built almost entirely on debt. By 2020, the company's borrowing spree reached levels that alarmed regulators. The model of selling promises to fund expansion could only last as long as confidence remained. Once trust began to weaken, the whole structure stood on shaky ground. That tension between dazzling growth and hidden risk set the stage for what would come next: the unraveling of China's most iconic real estate giant. The turning point came in 2020, when Beijing introduced the 3 red lines policy to curb reckless borrowing. For developers like Evergrande, whose empire depended on constant new loans, it was the beginning of the end. Suddenly, the cash pipeline dried up. Without fresh credit, Evergrande could no longer juggle its massive obligations. By 2021, the company's debt had swelled past $300 billion. Interest payments were missed, projects stalled, and investors grew nervous. That year, Evergrande officially defaulted on its bonds, shocking global markets. Families who had already paid for apartments gathered outside local government offices, demanding answers. For many, life savings were locked in unfinished towers that turned into symbols of China's property excess. Trading of Evergrande's shares was halted for 18 months. What had once been valued at $50 billion collapsed to a market cap of just $282 million, smaller than many mid-sized Asian firms. From being one of Hong Kong's most actively traded stocks, Evergrande became untouchable. In January 2024, a Hong Kong court ordered the company's liquidation after it failed to present a viable restructuring plan. Creditors from around the world lined up, but with assets scattered and projects incomplete, recovery looked grim. The process dragged on through the year, and by August 2025, the delisting was finalized. The end of trading marked not just the erasure of a company's value, but the closing chapter of China's most spectacular corporate rise and fall. The collapse carried consequences far beyond Evergrande's balance sheet. The shock reverberated through China's entire real estate sector, freezing new projects, pushing other developers toward default, and eroding household confidence in property as a safe investment. What had been the cornerstone of China's growth model was now a source of fear. And as Evergrande's empire crumbled, another question emerged. What would this mean for the millions of families still waiting for their homes, and for an economy that had long relied on real estate as its strongest engine of growth? Evergrande's downfall did not just erase a company. It left a trail of consequences that continue to shake China's economy. For millions of homebuyers, the collapse is personal. Families paid deposits and mortgages for apartments that may never be delivered. Across China, more than 1 million units remain unfinished. In some cities, buyers have staged protests outside government offices, demanding their homes or their money back. These were meant to be the foundation of household wealth. Instead, they became symbols of lost trust. For creditors, the story is equally bleak. Evergrande owed more than $300 billion, and much of it will never be recovered. International bondholders face heavy write-offs, while local banks and suppliers struggle to absorb their losses. Analysts estimate recovery rates could be as low as a few cents on the dollar. The fallout has already tightened credit across the sector, pushing smaller firms closer to default. Other developers are now caught in the same spiral. Country Garden, once seen as more stable, faces liquidation hearings of its own. Dozens of mid-sized builders have defaulted, creating ripple effects through construction, steel, and cement industries. For China's economy, the impact is structural. Real estate and related industries once made up nearly a quarter of GDP. That engine has stalled. Property sales have dropped, new construction has slowed, and land sales, a critical source of revenue for local governments, have collapsed. The wealth of China's middle class, long tied to rising home values, is now under pressure. The Evergrande crisis has shown that what was once seen as the safest bet in China, a property, is no longer reliable. And this loss of confidence has left Beijing struggling to find a new growth model. Behind the numbers lies a very human story. At the center of Evergrande's empire was its founder, Hui Ka Yan. Once celebrated as one of China's richest men, he symbolized the promise of endless growth. At his peak, his fortune was estimated at more than $30 billion, and his lifestyle reflected it. Luxury homes, a football club, even ownership of one of China's biggest private jets. But when Evergrande began to unravel, so did Hui's fortunes. In 2023, he was detained on suspicion of financial crimes. Authorities accused the company of falsifying records and misleading investors. Several executives were fined, and in a rare move, PwC, the auditing giant that signed off on Evergrande's books, was banned for 6 months from offering new services in China. The fall from grace was dramatic. Hui, once a national success story, is now a symbol of excess and failure. For many Chinese families, his rise had promised security and prosperity. His downfall instead left them with half-built apartments and broken trust. This personal collapse mirrors the larger story. The transformation of China's property sector from a source of pride to a source of pain, with consequences that extend far beyond one man. The collapse of Evergrande did not stop at China's borders. Its shockwaves spread through global markets, exposing just how interconnected the property boom had become. International investors, who once lined up to buy Evergrande's bonds, are now staring at billions in losses. Some of the world's largest asset managers, banks, and pension funds were caught in the fallout, reminding everyone that China's real estate market is tied to global finance. The pain also reached suppliers. Evergrande had contracts stretching across Asia, from steelmakers in Korea to furniture exporters in Southeast Asia. When payments stopped, entire supply chains felt the hit. Commodity markets reacted too. Iron ore prices slumped as construction demand in China weakened, sending ripples through Australia and Brazil, two of the world's largest exporters. At home, the damage is even deeper. China's middle class had built much of its wealth on property. Falling home values and stalled projects have shaken consumer confidence, leaving households cautious about spending. Shopping malls sit half-empty, and growth in retail sales has slowed. What once fueled China's rise is now weighing it down, and that burden is increasingly being felt in economies far beyond its borders. The story of Evergrande is more than a corporate failure. It is a warning written across China's skyline. In 2021, the demolition of half-built towers in Yunnan became a symbol of waste, a reminder of how quickly dreams can turn into rubble. 4 years later, the delisting of Evergrande in Hong Kong brought a different kind of closure, the official end of an era when property was seen as the safest engine of China's growth. The lesson is clear. Debt-driven expansion creates the illusion of endless prosperity, but once the cash dries up, the collapse is inevitable. What vanished with Evergrande was not just market value, but confidence. From families who trusted in homes never finished, from investors who believed in returns that never came, and from a middle class that once saw property as untouchable. China's challenge now is not rebuilding one company, but restoring trust in its economic model. Evergrande's fall shows how fragile growth becomes when it leans too heavily on debt and speculation. And it raises the question that lingers long after the towers have fallen. How many more dominoes in China's economy are still waiting to collapse? Stay with us. Subscribe and follow as we track the forces reshaping the global economy.